This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and/or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy. Hello, you sexy sat stackers, and welcome to the latest episode of the Bitcoin Bulletin Podcast. I am Chris, and today is Wednesday, March 6th, 2024. Boy, do we have a lot to talk about, and of course, it is DCA Wednesday, so we're going to get into our dollar cost average stack of Satoshis. The last couple of weeks we've been opining, is this time different? And everybody always says this time is different. Every cycle I've been involved in Bitcoin, everyone... the mantra was this time is different. Even the people that say stay humble and stack sats towards the peak of the bull run were saying things like 200K by conference day. So never has it actually been different. Maybe arguably the last cycle was different with that double top. The double top in and of itself isn't different, isn't necessarily unusual, but the way it went about, certainly we had the whole world gone crazy with the virus and the lockdowns and things like that. So the environment was certainly different. And then, China had the miner ban after banning Bitcoin like 9 different times. Finally, they banned mining, and that caused like a 30% reduction in network hash rate, more like 40% as miners relocated or shut down and sold their operations. Moved to Texas and the United States, which I think has been a net positive for Bitcoin, net positive for Texas especially. But I digress. This time we can arguably say is different. Why? Because Bitcoin briefly broke its all-time high yesterday, that being Tuesday, March 5th, depending when you're listening to this podcast, Tuesday, March 5th, 2024, reaching as high as $69,240 per Bitcoin before dropping drastically back down to as low as $59,224. Obviously, it is mostly recovered since then, which is nice because this is DCA Wednesday and sats are getting expensive enough as it is. I mean, obviously it would have been nicer to buy at 59, but it's nice that we didn't blow past the all-time high and then go on to like 80 or 100,000, because at 100,000 we'd only be getting 1,000 sats per cuck buck for our DCA stack, and that would be just depressing. And that's going to happen sooner rather than later anyway. But I digress. We have a lot to talk about, including price and so much more. But before we get into all of that, let's take our customary look at the vital statistics. As of the time of this recording, we are sitting at a block height of 833,476, and Bitcoin is ringing in at a US dollar value of $66,130, and that means each filthy fiat cuckbuck that we convert to Satoshis is only going to get us 1,512 sats per dollar. Obviously 50% more than we'll be getting when Bitcoin blasts past $100,000 per Bitcoin, but still not quite as much as we were getting just a month or so ago. I mean, in February, we were getting 2,522 sats per dollar. I guess that was the end of January, but still 2,248 in the beginning of February. And so, people like to say they're, when no coiners or pre-coiners always say they're too late. It's too late. I missed out. The big gains were, 10 years ago or whatever. When they first learn about Bitcoin, it's almost always about the price. Usually when newbies learning about Bitcoin, it's because it's rallying again. In the past, it was, they had never heard of it, but it's this miracle investment that somebody took $1,000 and became a billionaire with. And so it's the money, the US dollar, the fiat value, purchasing power that gets them interested before they put in their 100 hours of education and ultimately learn what Bitcoin's really about and appreciate Bitcoin for its fundamentals, for its freedom technology, for its equality technology. But I digress. We all have those stacking goals, and the higher Bitcoin goes in US dollar terms, the harder it's going to be to stack sats with that fiat money that you get in exchange for hours of your life. That being said, one day, it's not inconceivable we're talking about, one day when Bitcoin hits $1 million US dollars per Bitcoin, that'll put it at Bitcoin's at Satoshi cent parity. So one Satoshi will be worth 1 penny, 100 sats will be worth $1 US dollar. When Bitcoin hits $100 million, and it's possible that happens, maybe not in our lifetimes, maybe sooner than we think, that would be dollar Satoshi parity. And so even though, $100,000 Bitcoin will only purchase you 1,000 sats per dollar at that point, when you figure in the future, that's going to be $1,000. That's 1,000x, 1,000 to 1. That's not too shabby. I'm getting way ahead of myself here. Let's get back to the vital statistics. So, Bitcoin's current price of $66,130 is down 4.5% from the all-time high set just yesterday. So still down quite a bit. So fortunately, we're going to get cheaper sats than had to happen today. And while 4% is nothing for Bitcoin, we've all seen those 10% up or down moves. So who knows? Even while I'm yapping, maybe Bitcoin retakes its all-time high. Max Kaiser tweeted that he expects to see $75,000 by Friday. We'll see if that comes true. Obviously, I say nobody knows. Nobody has a crystal ball. Anybody that's tweeting stuff like that is tweeting it either out of euphoria, they're excited, they're just happy. They're not necessarily scammers. They're not necessarily of evil intent. And I'm not talking about Max Kaiser here. I'm talking about people in general. They get excited when the price is pumping, and we like to make predictions, even though, we're not TA guys. We know TA is voodoo. It's fake. It's scammery, in my opinion. But even Matt Odell got carried away during the last bull run with his predictions. So it happens to the best of us, but that's why they try and remind you to stay humble and stack sats. The current block puts us just 6,524 blocks away from the halving. As you know, the reward that miners receive for finding a block of Bitcoin is cut in half every 210,000 blocks, which works out to about every 4 years. And that is what a lot of people, most people that I know, believe is responsible for Bitcoin's cycles. It's 4-year cycles. Traditionally, about 6 months to a year after the halving, Bitcoin eclipses its previous all-time high and then goes on to set a new all-time high a year to 18 months after the halving before the crypto winter, the Bitcoin bear market starts and rinse and repeat, right? So this time is different. This time we eclipsed the previous all-time high before that halving. That halving is still 6,524 blocks away, depending on whose estimator you're looking at. That is slipped. It's now moved back a day. It looks like it's going to be occurring around April 20th, 2024. So back on Elon Musk's favorite holiday. And of course, the only thing we know for sure is it's going to happen at block 840,000. That could be 420. That could be 424. We just don't know. That's based on blocks coming in at 10 minutes on average. And they very rarely do that because, mining it's a lot like flipping a coin. If you flip a coin 2016 times, you're going to get, 1,008 heads, 1,008 tails ish. But if you flip a coin just 5 times in a row, you might get heads 5 times in a row. And I'm getting way ahead of myself again, but the long and the short of it is it's possible for a bunch of blocks to come in back to back. We have a couple hours where blocks are just screaming in a minute or two apart, and then that moves the halving up. Or it's possible we get a couple of days where we have 1 and 2 hour blocks, crawling in way slower than that 10-minute average. And then, that pushes that halving date out. So very difficult to tell, which unfortunately makes it difficult to plan those halving parties. And it sounds like there's going to be a bunch of them now. Previously, the halving was celebrated kind of like New Year's Eve, when it was, it was a big to do. Everybody would, you do the countdown, 10, 9, 8, 7, 6, 5, 4, 3, 2, 1, Happy New Year or Happy Halving, and drink your champagne and celebrate the official beginning of the next Bitcoin price cycle. But we don't know when that's going to be. And so if you're planning a major party, sometimes you're way off. Of course, in 2020, we didn't get those major parties because the lockdowns, travel was restricted. But it looks like things are back to normal. I'm really jealous of the halving party that's going on in El Salvador, and that's like the beginning of April, so they're probably going to be way early. I heard of another one just the other night on a podcast that's going to take place in Poland. That sounds like a lot of fun. I think they're expecting 500 plebs from all around the world for that one. So regardless of where you are or what you're doing, even if you're just grabbing whichever pleb you can find that you might already know, or maybe you have to break down and subscribe to something like Orange Pill app to find somebody to celebrate with, or whether you're just going to tune in and listen to us in spirit by playing old Bitcoin podcasts, we all have our ways we celebrate. It's going to be a lot of fun. If you can find some Bitcoiners around you, or you have the means to travel to El Salvador or to Poland or anywhere in the world to hook up with Bitcoiners and just have a real blowout bash on the halving, it's going to be a good time. El Salvador is the one I'd really like to go to, but A, they're having it way before I think the halving is going to occur. B, they're having it around the 2024 eclipse. And I have travel plans to go see the eclipse that I've had almost since the last halving. I'm almost 4 years now. I've been planning to meet up some friends I haven't seen in 30 years, which is going to be cool. So it's going to be a good time. None of them, to my knowledge, are Bitcoiners. One of them specifically isn't. In fact, he's a banker, a very handsomely rewarded banker in fiat terms. So it's one of those people that, he has no reason to see Bitcoin. It's not necessarily that he's against the concept. It's just fiat's been really good to him. But nonetheless, I have something I'm going to do around the halving, maybe a week or two before the halving, obviously, depending when the halving happens. But anyway, slice it. That halving is coming up on you like a big dog with a wet nose. If you're not prepared for it, it's going to be here before you know it. So I would recommend, if you don't already have plans, to start poking around, see what your friends, your fellow Bitcoiners are doing, or just look around online, because it's going to be a blast. And hopefully you get to celebrate it with plebs. And Bitcoin's current near all-time record price gives it a market capitalization of $1.3 trillion. That is closing in on the market cap of silver. Silver has a market cap of 1.319 trillion, so almost 1.32 trillion. And Bitcoin was actually over that when we broke the all-time high, so it gave that back up. But it's flirting with the market cap of silver, which is pretty cool. Silver, of course, being the first door that the Grim Reaper has to knock on the way to eclipsing gold. Gold currently has a market cap of 14.056 trillion. That's kind of controversial because nobody really knows how much gold's out there, since a lot of it's in the form of jewelry, or it's diluted down. It's not pure gold, or it's stashed away in vaults, or even buried in somebody's backyard or in a swamp, hidden somewhere for their emergency stash. So we have ideas of how much Bitcoin's been mined, but since Bitcoin's been coming out of the ground for the entirety of human history, we don't really know. But this estimate says gold has a market cap of 14.056 trillion, which means that the Bitcoin has another 10x to go before we overtake gold. So if you think you're early, I don't think you're early until I don't think it'd be fair to say you're no longer early until Bitcoin has surpassed gold's market cap. But hey, what do I know? Hopefully you're already here, you're already stacking, so you're not one of those people worrying that you've missed out. Speaking of gold, for those of you who still value your wealth in gold, for you gold bugs who have not gotten on zero or off zero, depending on your perspective, it will currently cost you 32.5 ounces of gold to purchase just one Bitcoin. That is more than 2 pounds of gold, 32.5 Spanish doubloons, 1 ounce gold needles, whatever you call them, whatever you stack, you gold bugs, 2 pounds, more than 2 pounds of gold. And I predicted multiple times throughout the last year or so that by the end of this year, we were going to be referring to Bitcoin in terms of pounds of gold instead of ounces of gold. At 32.5 ounces of gold, that's still in the territory where we will fairly refer to it in terms of ounces, but it's getting there. I mean, we're obviously in multiple pounds of gold now. So that's coming true. And if you are still a gold maximalist and you don't have any Bitcoin, they say you get Bitcoin at the price you deserve. And currently that's 32.5 ounces of gold for just one Bitcoin. So if you wait much longer, you might find yourself priced out. You're certainly not going to get as many Satoshis as you could have. For those of you who value your wealth in pizza, one Bitcoin will purchase you 3,689 large pepperoni pizzas from Papa John's. That is more than one pizza a day, or that is one pizza a day for more than 10 years, 10.133 years to be exact. And that is a heck of a lot of pizza. I keep giving this metric on how many pizzas one Bitcoin will purchase, and that's kind of an homage to when Laszlo purchased, made the first real world Bitcoin purchase, where he purchased 2 Papa John's pizzas for 10,000 Bitcoin. 10,000 Bitcoin. Obviously, he had to do that for Bitcoin to be where it is today. So it's not like, and it's not like he's hurting, because if I recall, he invented ASIC mining, basically. Maybe it was GPU mining. Either way, he was really big on mining, and he forwarded mining technology. So I'm sure he's comfortable with his stack still. The point being, we were talking about how many pizzas one Bitcoin will purchase you and how many years you can eat once a day for just one Bitcoin. And then it dawned on me that, you're never going to be able to eat your last pizza with Bitcoin, because, we're talking more than 2 halving cycles now worth of pizza. And so we've got whatever Bitcoin's going to run up to this halving cycle. If it falls back down to where we are about now, that's still 10 years worth of pizza, even if, it balloons up to 20 or 30 years worth of pizza and then crashes back down to 10 years worth of pizza. But then we've got 2028 happening, and then that's going to set a new halving cycle, and then the 2032 halving. And so we're going to be halfway through the euphoria of the next halving cycle. If cycles continue, if we don't end up with the super cycle with, hyper Bitcoinization before then, and as a result, the price of Bitcoin could very conceivably spike in value faster than you can eat your Bitcoin by ordering pizzas. Eat your Bitcoin gives me a particular chuckle because that quote from the head of the Bank of International Settlements, everyone's favorite cartoon banker, Augustus Carson, literally, if he looks like the bad guy from some cartoon or comic book movie about an evil villain banker. But anyway, he had that quote that's been making the rounds on social media saying Bitcoin has no intrinsic value because you can't eat it. I don't know how much the dude weighs, but it's got to be over 400 pounds. And I'm not fat shaming him. I just think it's funny that we're talking about eating your Bitcoin and he's talking about you can't eat Bitcoin. And obviously you're not literally eating your Bitcoin, but you're figuratively eating your Bitcoin if you're blowing it on pizza, at least 3,689 pizzas at the time of this recording. Speaking of Bitcoin activity, the mempools are looking pretty darn clogged still. According to Clark Moody's dashboard, his mempool has 91 blocks worth of transactions pending. Other mempools have different parameters and show even more clogged full, but for purposes of consistency, we like to talk about Clark Moody's mempool. That is up, so 91, that is up from 73 blocks last week, although you just have to go back 1 month to where we were previously at 91 blocks worth of transactions. So nothing unusual, but still fairly busy. Lots of on-chain activity going on out there, whether it's people actually consolidating their Bitcoin or using their Bitcoin to make purchases or buying Bitcoin and moving it to their hardware wallet, or whether it's that ordinals and inscription shenanigans. Either way, if you have an on-chain transaction that you need to make, and it's an important transaction, Clark Moody's fee estimator is recommending a fee of 87 sats per VByte to guarantee that that transaction is confirmed in the next block. If you have up to a day to wait, he's saying that you can use a set of fee as low as 13 sats per VByte. And if you have up to a week, a fee of just 10 sats per VByte will eventually get confirmed. Dempool.space is telling a slightly different story. They're saying a high priority transaction will need a fee of 21 sats per VByte. That's basically a quarter of what Clark Moody's saying. That works out to about $1.94 in US dollar terms. That is significantly less than last week when we were looking at a 65 sat per VByte fee, which was $5.63, even though Bitcoin was cheaper in US dollar terms. So I guess the lesson here is, if you've got a priority transaction to make that's on chain, make sure you got the most up-to-date data you can, maybe from more than one source. And of course, use a wallet that will let you use replace by fee or some other scheme to bump that transaction if for some reason it doesn't get mined in time or even at all. Mempool.space is saying if you have a medium priority transaction, you should still include a fee of 18 sats per VByte. A low priority transaction should include a fee of 16 sats per VByte. And even a no priority transaction needs a fee of 12 sats per VByte, which is pretty close to Clark Moody's fee estimation of between 10 and 13 for being confirmed within a day to a week. And that's still relatively inexpensive. So if you are starting to get worried about your smaller UTXOs, if you got a bunch of UTXOs out there that are 100,000 Satoshis or less, and you're considering consolidating them, personally, I usually wait to see what fees are like on the weekends, but you never know. We could get another all-time high. Bitcoin could rocket off to the moon and fees could not go back down for ever, or for at least an extended period of time. So 10 sats per VByte is still relatively inexpensive. That's what I did my last consolidation transaction at. Back then, that was a medium priority recommendation, and it actually confirmed in the next block. Right now, you're probably going to be waiting a while since there's 87 sat per VByte fees out there getting mined. But again, this is a you do you thing, but it's an interesting metric to take a look at. And speaking of metrics, that metric that has been my favorite for most of this podcast, Bitcoin's 24-hour average transaction rate, is down a little bit from last week, but still a healthy 4.46 transactions per second. For the entirety of this podcast, anytime we've seen Bitcoin above 3.15 transactions per second, the price has either been up or elevated. If you zoom out just a tiny bit, obviously the price is down from yesterday, but it's not down from last Wednesday. Last Wednesday, of course, we were zooming along at 4.9 transactions per second. I actually think TA, like I said, it's voodoo, it's pseudoscience, it's BS, quite frankly. So this isn't any official kind of TA. It's just a gee whiz that I've noticed in the almost 3 years now that we've been doing this podcast, that anytime Bitcoin had healthy on-chain activity, the price was usually way up. You would think that makes sense at face value because obviously the price is up if everybody's trading it. But then again, there's going to be a lot of transaction activity when people are bailing out of a Bitcoin on the way down as well. So you would think that would make sense. But it just hasn't worked out that way. In general, this has been a fairly reliable indicator. Obviously, causation or correlation is not causation. It's just fun to look at. And speaking of mining, and speaking of activity, since we last spoke, Bitcoin had a negative difficulty adjustment. The Bitcoin mining difficulty got 2.9% easier. As you know, Bitcoin mining difficulty is adjusted every 2016 blocks, which is theoretically every 2 weeks, with the goal of blocks coming in at an average of 10 minutes. I already got into that a little bit a couple of minutes ago. You know, that because it's basically like flipping a coin, it's more or less random in many ways. That blocks sometimes come in really fast, sometimes they come in really slow, and that's why Satoshi decided that he was going to stretch that average out over 2016 blocks before the algorithm, before the Bitcoin protocol decided whether it was going to increase or decrease mining difficulty. Nonetheless, we did see a decrease on Leap Day, the 29th of March. What was that? The day after the Bitcoin Bulletin Podcast's last DCA Wednesday episode. That was the first decrease in quite a while. Prior to that, we had had an 8.2% increase and then a 7.3% increase before that. But from time to time, we see those decreases. And it isn't always because things happening like the China miner ban or the big winter storms in Texas. Sometimes it just happens. Sometimes we don't even know why it happens. It could just be pure random chance that even over 2016 blocks, sometimes, you know, miners are getting luckier than they theoretically should be. And there's lots of other factors that come into play. For example, as we get closer and closer to the halving, a lot of the big miners are starting to think about their strategy for how they're going to mine when the reward is cut in half. Usually that involves adding a bunch of new miners in advance that are more efficient, that are going to still be profitable after the reward is cut in half. But you know, things can get crazy in terms of hash rate as we approach the halving. But that's the genius of the difficulty adjustment. Every 2 weeks, it takes that into account and smooths out those bumps. Currently, we're 1,148 blocks away from the next mining difficulty adjustment. That looks like that's going to be about March 14th. And it's going to be an increase. It looks like we're going to make up some of that decrease we had. And depending where you get your data, it's going to be an increase of anywhere between 0.8 and 1.34%. We are less than halfway through the mining difficulty epoch. So it's still kind of too early to tell. Anything can happen in the next week. But it'd be fair to say that we're going to be looking at an increase of pretty close to what we gave up in the 2 to 3% range if it continues to trend upwards. Bare minimum, it's looking like it's going to be anywhere between a 0.8 and 1.34% increase. That is because blocks are currently averaging 9 minutes and 55 seconds. Obviously, that's faster than 10 minutes. If that average holds, you know, then the protocol will adjust the difficulty up to slow those blocks down to try and get them closer to 10 minutes. 5 seconds is not a lot of time. You just get 1 or 2 blocks that take almost an hour, and that'll throw that metric out of back into line. So you never know. This is just a gee whiz to get a general idea of where we're going, hash rate wise and mining difficulty wise. And if you're just a pleb, it really doesn't matter because Bitcoin's going to do its thing, tick-tock next block. And it really only matters if you're a large corporate miner, or maybe you're mining at home, that you know you'll earn maybe 1 to 2% fewer satoshis after the next difficulty adjustment. Real quick, I want to thank those of you listening on your favorite podcasting 2.0 app, such as Fountain. You can earn sats just for listening to your favorite podcast on Fountain, as well as help support your favorite podcast through the value for value model. And speaking of listeners, our geographic distribution of listeners has remained almost identical. The top 10 countries have not changed. We saw a little bit of a change as far as the number 2 country dipped by about 1%, but still remain the number 2 spot. And those countries are as follows. Number 1 is the United States. So hello to all my fellow Americans out there listening tonight. Number 2 remains Argentina. They dropped from 10% to 9%, but still remain the number 2 spot. So muchas gracias, amigos in Argentina. Number 3 remains Germany. So Dankeschön, mein Freunds in Deutschland. Number 4 remains Luxembourg. Again, Dankeschön, mein Freunds in Luxembourg. And Morgen to all of you listening out there. Number 5 remains Canada. So hello, good day, my friends in Canada. Number 5 remains Spain. So again, muchos gracias, amigos, in Spain. Number 7, as usual, at least for the last couple months, has remained Colombia. So hola, muchos gracias, amigos, in Colombia. Number 8 remains Sweden. So hey to my friends listening in Sweden. Number 9 remains the United Kingdom. So cheerio to my friends listening in the United Kingdom. And number 10 remains Venezuela. Again, muchas gracias, amigos, in Venezuela. It is really, really flattering to look at those numbers and see that despite the fact half of you are listening in the United States, the other half of you are literally scattered all over the world. Europe, South America. That wraps up the top 10. But if you zoom out just a tiny bit, we've got people all over the world. So that's really cool. All right, on to the news. We already spoke about how this time is officially different in terms of Bitcoin breaking its all-time high before the halving. Whether that is hype because the ETFs and it settles back in and then we don't see that all-time high again until after the halving, which is literally only a month and a half away, or whether we blast to 75,000 like Max Kaiser predicts by Monday or even higher. I guess we'll only know in hindsight. But obviously, there's a lot of champagne corks got popped yesterday and a lot of headlines, such as CoinDesk's headline about the all-time high. Of course, they poo-pooed it a tiny bit, saying adjusted for inflation, Bitcoin hasn't topped its all-time high. If Bitcoin's an inflation hedge, shouldn't we adjust for inflation? All right. I know a lot of people have been parroting this on Twitter X. I've seen a lot of it, people that I follow, people that I'm friends with. And I just want to point out, when we talk about the all-time high, we don't say, quote, adjusted for inflation. And the reason we don't is because we're not talking about Bitcoin's purchasing power. We're literally comparing it to the US dollar. And regardless of what inflation was, the all-time high was how many Bitcoin we could trade for how many US dollars. We're not talking about how many cheeseburgers or pizza can buy. That's a different metric. We already covered that. And in fact, it is an all-time high in dollar terms, period. Inflation is irrelevant in that metric. Obviously, if you want to sell your Bitcoin, you're not going to get quite as much as you would have for the same amount of Bitcoin in 2021 at the all-time high. Although that all-time high lasted just for seconds, then prior to this run-up, the number of days that we had been above 60,000 was less than 30. I forget what it was. It might have been less than 10. And the amount of time we were at 69,000 was measured in minutes. And so we've been at, we were hovering around 66,000 for days before it finally ran up to 69, and we're still at 66,000. So Bitcoin is doing better off than it was last time. But more importantly, we're talking about comparing it to the US dollar, not about comparing it to cheeseburgers or new cars. Just as when we talk about the Dow setting a new all-time high, or the S&P setting a new all-time high, or real estate being at a new all-time high, they don't say, well, adjusted for inflation, houses are just as cheap as they were in 1970. They just talk about how expensive that got. In fact, it's very popular on social media for people to lament the cost of housing and specifically point out how their parents and or the boomers scooped up all the houses at 80,000 in the 1970s, and now those houses are $500,000 and they can't afford them, and it's just not fair. They never say, adjusted for inflation, we're not getting as screwed as hard as we used to be, because that's not what they're talking about. And if you don't think that Bitcoin is truly at its all-time high because inflation has been rampant, imagine trying to convince the IRS that you do not owe capital gains tax on the Bitcoin you stacked in 2021 because it isn't worth as much as when it was adjusted for inflation. Either way, it's moot because Bitcoin's going a hell of a lot higher in the next year, maybe as soon as Friday. I was listening to a couple podcasts yesterday, and multiple podcasts were pointing out that 3 of the 4 times Bitcoin eclipsed its previous all-time high, it doubled in 18 days or less, went on to double its all-time high in 18 days or less. I think the only time it did not do that was the second all-time high, because we had that double peak last time around. So again, history doesn't repeat, but it does rhyme. So if it rhymes in that context, then we're going a heck of a lot higher, probably sooner than later. Of course, this time, as we've said over and over again so far in this podcast, is different in that we should not have hit this all-time high before the halving if history was going to repeat, if history is going to rhyme. So since it already did, that means we're already trending outside of the mean. And again, I don't have a crystal ball. I don't know. All that matters is we're going to stack as many sats as we can. We're going to hopefully do so together, because as Bitcoin gets harder and harder to purchase for those US dollars or pesos or euros or whatever your local fiat currency is, it's going to get to the point where you start worrying that, have I stacked enough? Do I have as many Satoshis as I'm really going to need forever for generational wealth to leave my kids, to leave my grandchildren? And that's what we're really worried about. And speaking of monetary inflation, if you haven't checked it out, check out the website pricedinbitcoin21.com. I'm pretty sure we've referenced that before in this podcast. We already kind of have our own metric where we compare gold and pizza, and we've done the cheeseburger thing once or twice. But pricedinbitcoin.com keeps a running total of what various commodities and common things, oil, what eggs, ground beef, whatever, are in Bitcoin terms. And in general, Bitcoin's getting, as Bitcoin goes up, all of that stuff is getting cheaper and cheaper as it trends to zero in Bitcoin terms, with the glaring exemption that if you look at the commodities column and you look at food, some of it spiked really high in Bitcoin terms in 2020 or 2021. And if you remember, that was during the Great Panic when you couldn't buy toilet paper, you couldn't find eggs, plywood was $130 a sheet, as the supply lines were shut down because people weren't working. But in general, it's pretty funny to see pretty much anything you want to research, any data point you want to look at on pricedinbitcoin21.com, it's trending to zero in Bitcoin terms. So that's pretty cool. Another cool thing to explore online, if you haven't already seen it, is Swan Bitcoin has a YouTube live stream that is a Bitcoin price ticker. So that's kind of neat because we've all seen price tickers on our phones or on our computers, on our laptops, regardless of which one you're using, that's updating the price in real time. But if you want it streaming in your house in the background, most of us or a lot of us either have smart TVs or you've got those little Roku sticks or something that plugs in your TV that will play YouTube. So you can open up the YouTube app on your TV and just have the live ticker running in the background on your TV in your living room or over your fireplace or in your bedroom or wherever your TV is, in your bathroom for those of you with TVs over your bathtubs, and have that running in the background. And is it me? I don't know if I just noticed this because my laptop is almost always on mute, so I probably just didn't notice. But the other day I was doing something. I was watching a video and I needed to turn the volume on, and I had the Swan's YouTube ticker on. And I started hearing this weird noise in the background of the video I was looking, and it realized that the Swan's live ticker is also playing music. So either they just added music, or it's because I had my laptop on mute every single time I had it on. And that's normally how I have my laptop, because I usually have so many different things open. If you're browsing the news or whatever you're doing, there's all these pop-ups that just start blaring obnoxious commercials or alerts, or if you're playing a game, or whatever, you don't want 9 different things interrupting. And usually I've got music playing on my stereo or something instead. So I just have my laptop muted. But it's actually been quite entertaining. It's kind of got almost like a techno jazz thing going on. It's a pretty good selection. I don't know if it's original music or what. I haven't tried to soundhound any of the songs to see if they're just playing music that they're paying royalties on, or if Swan owns that music, or bought royalty-free music, or is using royalty-free music or what. But either way, go to YouTube, check out Swan Bitcoin's YouTube channel, and they've got their live feed of the price ticker, and it's kind of cool to have that. And they've got it set to 1-minute candles, so the price action is pretty consistent, and it's fun to watch the price of Bitcoin go up and down, especially if you're the sort of person that is always staring at your block clock, or always staring at your phone, or always refreshing a website to see what the current price of Bitcoin is. Now you can just have it playing in the background if you're not watching TV already. Speaking of the all-time high, it's kind of funny because a lot of people had been commenting. I did myself commented on Twitter that, is it really the all-time high if Coinbase doesn't crash? And it wasn't even 4 hours later that, of course, Coinbase crashed. And worse than the normal, hey, they just won't let you buy or sell when there's a lot of activity and you miss that sell you needed to make, or you missed that buy you needed to make because Coinbase isn't available. This time, apparently, they were actually showing zero balances. People could log in. It just showed they had no Bitcoin, and that caused mass panic. That is largely what people are blaming for why Bitcoin hit the all-time high and then immediately dropped to 58, because people thought Bitcoin got hacked. Many, many, many people thought their Bitcoin was stolen. There was an absolute sheer panic over that, and that was definitely a wet blanket on the price activity. Bloomberg reported that this is also that's not the only time that happened. Just hours ago, when Bitcoin was approaching the all-time high again, Coinbase users see zero balance again as Bitcoin neared its record. And when I started prepping my show notes, that article is 36 minutes old. It's a couple hours old now. But it's just one of those things, it's not a bull run or a bear market until Coinbase goes offline. And there's a lot of people that are floating the conspiracy theory that they're doing it on purpose. And I don't have a hard time believing that, because this has been going on for the entire history of Coinbase. You think they would have learned their lesson the first bull run they were involved in? They didn't. So you would have thought they would have learned it the second bull run, last bull run, maybe. They didn't even learn it this time. So either they're doing it on purpose to manipulate price, maybe to give themselves some breathing room, uh, kind of like how the traditional markets have circuit breakers, or, and this is probably more likely, they don't give 2/10 of a shrazh about Bitcoin. They're too busy. They're too busy building their S-Coin casino, their altcoin casino, and it's just not worth it to them. They know that Coinbase is going to work just fine 99.9% of the year. And the fact that it's going to crash every once in a while when there's a rally or a bear market or a retracement, it's just not worth their time to do so. It's expensive to run those servers and to provide that extra capacity. So, they make a business decision, cost benefit analysis, that it's just, the customers will get panicked, will send out an apology, and then the servers will be back up, and nobody will, and it'll be business as usual, or at least so they believe. I think that's probably more likely. Because we all know Coinbase is not exactly a friend of Bitcoin. For the longest time, you couldn't even get Brian Armstrong to say the word Bitcoin. I mean, it made headline news when he actually said Bitcoin 6 or 7 months ago, when he was talking about cryptocurrency. So get your coins off Coinbase. Don't use Coinbase if you have any other alternative. Obviously, we use Cash App. There's plenty of other wonderful ways to buy Bitcoin without feeding the evil empire, especially now that Coinbase is a huge, huge honeypot, because they're custodying $10 billion or so worth of ETF Bitcoin now, maybe even more by now. So, if Coinbase ever does get hacked one day, that's going to be a dark day. We're going to have our Mt. Gox moment or our FTX moment again. And the chances of it being Bitcoin, of the chance of it being Coinbase, I think increase as the number of Bitcoin in their honeypot increases. So stay away from Coinbase. If they do get hacked, don't be one of the people that loses your coins. In fact, obviously, you shouldn't be keeping your coins on any exchanges. We spoke about consolidation. As fees get more expensive, it isn't really prudent to transfer $10 or $20 of the Bitcoin to your hardware wallet, because it'll be unspendable. It'll cost you $50 to spend $10. Because when transaction fees get expensive, you'll want larger UTXOs, maybe a 500,000 or a million UTXOs, which is going to be close to $1,000 worth of Bitcoin here in the not too distant future. Again, that's a you do you thing. You decide the trade-off, what you're comfortable with. Maybe transfer at smaller amounts and then consolidate, but the smaller that amount is, the more of it you're going to be giving up in fees, even though you're consolidating. Hopefully you're giving it up when fees are at its cheapest. So, you're not doing it. It's not as bad as if you try and consolidate when it's, $50 to make a Bitcoin transaction like it was in 2017. But I digress. Speaking of exchange-induced panics, and pullbacks, and the pullback we had, I want to remind you, and I'm sure we've mentioned this multiple episodes, that every bull run Bitcoin has ever experienced, it has had multiple large pullbacks. I heard it said, and I didn't actually pull the exact statistics, that every halving has had between 5 and 30% pullbacks. But without looking through all the data with a fine-tooth comb, even looking just back at the last year, Bitcoin had a huge pullback in January, and then it had a huge pullback in September of last fall. And I think there was one in October as well. So, Bitcoin doesn't just run straight up. Look at any chart. Obviously, if you zoom out too far, it smooths things out quite a bit. But if you look at the 1-year chart, you can see just how jagged it is. We've had multiple fairly large pullbacks, even in the last 2 months. No, not even including yesterday. So large pullbacks are inevitable. It just happens. That there are people out there that are trading. There's businesses and day traders that keep that banker schedule where they trade Monday through Friday and close out and go home for the weekend and go golfing, even though Bitcoin technically trades always. They're just on that I'm a stockbroker schedule, because that they're not Bitcoiners, they're traders. And so there's going to be pullbacks, especially towards the end of the month and traditional times when traders are closing out their positions or taking profits so that they can book a profit, which is silly. We don't recommend. Well, we don't give financial advice, but I personally wouldn't trade for multiple reasons, not the least of which is, are you really making a profit if you have to file 365 different capital gains reports for every day you closed out your position and sold Bitcoin at a tiny little profit. And then short-term capital gains rates are 40% or so in the United States, because if you're trading day trading, you haven't held that Bitcoin for a year, so you're going to be paying short-term capital gains. So let's say you made $1,000 profit, and you pay $400 of it in capital gains tax every day. That whittles away at that, and then you can still be on the hook for a big capital gains bill, and then you get caught with your pants down when Bitcoin runs like it did yesterday and sets a new all-time high. When people are thinking, all these people were preaching that Bitcoin is going to go down to 45,000 if they closed out and were preparing to buy back 45,000, they got wrecked. So you buy back in, you have less Bitcoin, you have fewer Satoshis than you did before, and yet on paper, as far as the IRS is concerned, you owe thousands of dollars in capital gains tax. It's just silly. That is why we DCA. Speaking of traders, speaking of the market, obviously the ETFs had a lot to do with the rally, and Bloomberg ran the headline March 1st, so right after our last DCA Wednesday episode, saying Wall Street turbocharges Bitcoin's rally and rakes in cash. Bitcoin isn't going away anytime soon, and what was once almost universal resistance to it on Wall Street is disappearing day by day. And that headline came out 5 days before Bitcoin took off and set a new all-time high. So that is becoming common sentiment among the traditional financial media, the traditional financial types, the Wall Street types, the normies. And that, I think, is obviously why we saw a new all-time high before the halving. And why this time may truly be different all the way around, because in addition to having the supply shock from the halving, we've got a demand shock and a supply shock happening simultaneously. So that's really cool. And the ETFs are scooping up Bitcoin in record style. In fact, CoinDesk ran the headline yesterday, or early this morning, referring to yesterday. BlackRock's Bitcoin ETF added a record 12.6 thousand Bitcoin in Tuesday's carnage. IBT's total inflows surpassed the $9 billion mark as prices plunged following Bitcoin taking out a record high above $69,000. And I think that's because, as I believe, that dip wasn't caused by people taking profits. That dip was caused by the panic of the normies, retailers, plebs, seeing zero balances in Coinbase. Maybe it was something more nefarious. Maybe it was market manipulation, so the ETFs could soak up more Bitcoin. Don't know, don't care. The point is that while everyone else was panicking, BlackRock soaked up 12,600 more Bitcoin, and that's nothing new. They've been doing that pretty much almost every day. I mean, it's gotten a little more. There's been some variance, and that was kind of a record. I think that was more than they've soaked up in any particular day. But they're buying Bitcoin faster than people can sell it, faster than anyone can mine it. That's that demand shock we were talking about. Hodl posted a similar post 16 hours ago saying BlackRock added 12.4 thousand Bitcoin while DGens got liquidated yesterday. I don't know why there's a price discrepancy between what what Hodl, what CoinDesk, and what BitMEX Research posted. BitMEX Research posted their updates for yesterday showing that BlackRock added 12,447.3 Bitcoin yesterday, and that is double what they added the day before when they had purchased only 6,000 Bitcoin. Prior to that, I think the highest single volume day they had was on the 28th of February, the day before Leap Day, when they added 10,108 Bitcoin. Either way, BlackRock now holds 173,807.4 Bitcoin. They are rapidly closing in on Michael Saylor. It will be just a matter of days now, maybe to only 3 or 4 days before they own, just BlackRock owns 1% of all the Bitcoin that will ever exist. And that is pretty amazing. And it is also reasonably scary. So that's why I say, don't sell your Bitcoin to BlackRock, plebs. I don't care, if you need to spend some Bitcoin with somebody that accepts Bitcoin, or you've got a major life event that you need to pay for. Okay, fine. But if you're just trying to trade to make a profit, think about it. This profit you're making is by selling your Bitcoin to BlackRock or to Fidelity. And once it goes in, it's never coming out. You're never getting it back. You are not taking a profit. What you are doing is you are closing and sealing the escape hatch while you're still trapped in the burning building. You're getting out of the life raft. You're already in the life raft. When you step out of the life raft, BlackRock is going to step in and sit in your seat. And when the Titanic finally goes down, you might not be able to find a seat to get in on. So please don't sell your Bitcoin to BlackRock. Just take that into account, because as they snap up more Bitcoin, I mean, they almost own 1% of all Bitcoin. Eventually, it wouldn't be unusual to think that they might own 10%. At least all the ETFs would be easy for them to have 10% of the supply. And that would be 10% of the Bitcoin that isn't available to help people that need it, to help people with failing currencies, or to help lift people out of poverty, or help people where there are no banks or ATM machines, no Visa cards. Think about what you're doing. Think about what the IRS is going to do to you, and hodl. Again, not financial advice, but I'm going to guilt trip you anyway. We don't have the data yet for today because the data comes out at night. It should be coming out any minute now. But it looks like today was a good day for the ETFs as well, at least judging by the outflow, because BitMEX research is reporting that the GBTC outflow is only $276 million. As you know, people have been bailing out of GBTC because they were locked in for years. They were sick and tired of it. They were suing to get out of GBTC. Now that it's an ETF, they can sell, and many people have done so, whether they've rolled that back into another ETF or just gotten the heck out, or bought Bitcoin on an exchange and took self-custody would be ideal. Either way, GBTC, we've seen hemorrhaging in the $500,000 or in the 500 million to $1 billion range almost daily. Today, however, GBTC's outflow was only $276 million. So if the inflows on the other ETFs are even where they were, not yesterday, but like the day before, where BlackRock soaked up 6,000 Bitcoin instead of 12,000, even if it's just an average day for the ETFs, and that's something to think of, an average day, because the ETFs have been nothing but average inflows. But as long as they had a decent day, with GBTC having slowed outflows, that's a good sign. Speaking of outflows, we mentioned this a couple weeks ago, and one of the things people have been waiting for was, Genesis is in going through bankruptcy proceedings, and they were tied up in GBTC, and that's why they're bankrupt. And they had sought permission to liquidate like $1.5 billion worth of Bitcoin from the bankruptcy proceedings. And they got that permission, and we've all been waiting with bated breath for when those hit the market, because it was expected that would depress the Bitcoin price. We had 2 or 3 days in a row where GBTC had $500 million outflows. So if you combine all three of those, it's possible that could have been the Genesis Bitcoin being sold, or it could be that none of it's been sold yet and we're still waiting for it to dump, in which case we'll get another pullback probably. But think of that as an opportunity to buy more sats than you would have been able to buy otherwise. I haven't heard yet whether that's sold or not. I feel like we're probably only going to find out way in hindsight when they either file a financial disclosure or some other form in bankruptcy proceedings. Either way, price is booming, and of course, we're now at the stage where the charts and the forecasts are coming back out in full force, including Plan B and his stock-to-flow model. Folks, this is fun. It's fun to look at. The rainbow chart of years past, Plan B stock to flow model, they're all great. But just to remember, all TA is BS. I mean, even I've retweeted the charts, even on the podcast website. And I think they're useful in the same way that one studies history, but there's no trick to predicting the future. Just because history tends to repeat or rhyme doesn't mean that, there's going to be, another Great Depression on a specific date, and it's, foretold in the cards, and because it happened once before, it's going to happen precisely again that way. There's just, nobody has a crystal ball. Bitcoin in particular likes to throw us curveballs. It seems like there's black swans every year. It kind of makes them not really so much black swans, but just the way Bitcoin rolls. There's a lot of shysters and a lot of scammers out there. And if you see somebody and they're hawking TA and they're publishing charts all the time, that's probably all they're doing on Twitter, because they've got something to sell. That's their product. Either they're peddling influence for subscribers because they want that advertising money, or they've got some course they want to sell you, or they want you to subscribe to their newsletter. You see all these late night infomercials where people are going to teach you their secret course to making money on Amazon, or their secret course to making billions on real estate. And all you need to do is sign up for this $200 class. If they're billionaires and they can flip all this real estate and it's so easy for them to do so, why wouldn't they just be doing that instead of selling these seminars where people are giving them $200 at a time? It's because you're the product. They're not making millions off of real estate. They're making millions off of you signing up for their courses. And these TA guys are the same kind of sleaze. So it's fun to look at the charts. It's fun when they appear to be coming true, because Bitcoin just happens to be doing what they predicted. But again, correlation isn't causation. Just keep that in mind. try and stay humble while you're stacking sats. Otherwise, it can bite you in the butt. Because to reiterate what I've already gone over this podcast, this episode, if you listen to these influencers just a week ago when they were calling for Bitcoin to drop to $45,000 instead of going to an all-time high, which is what happened, and you traded on that, you got wrecked. And that's not a one-off. The only reason that's, only happens once every couple of months or so is because Bitcoin tends to make its runs only 10 or 15 days out of the year that it makes these dramatic moves. And because you don't know when they're going to happen, the chances of you getting caught with your dork out when that happens is significant. And in general, traders get wrecked. All right, on to why we were here. We're here because I love talking about Bitcoin. Hopefully you love listening to Bitcoin. If you're like me, you just can't consume enough Bitcoin content. But we're also here because it's Wednesday. And almost 3 years ago, we decided that every Wednesday was going to be DCA Wednesday. And DCA, of course, is short for dollar cost averaging. And dollar cost averaging is an investment strategy where you invest your money in equal portions at regular intervals, regardless of price. As they say, time in the markets beats timing the markets every time it's tried. So this is going to be our 137th stack. We chose our equal portion at just $20. I wanted to keep it simple. I wanted to keep it an amount that regardless of where you're listening from, regardless of who you are, you can probably come up with $20. If you are, Michael Saylor, obviously you're going to be stacking a lot more. If $20 is a lot for you, maybe you're stacking $1. Cash App will let you buy $1 with a Bitcoin. This is a you do you thing, but by choosing $20, I think I chose a number that most people listening to our podcast could be comfortable with. Our regular interval, of course, is Wednesdays, DCA Wednesdays. And, that's again a you do you thing. Most people DCA when they have money. So if you have a regular 9-to-5 job and you get paid every Friday, then weekly can be your DCA average. You can even DCA every 2 weeks. There's people that DCA daily. There's even services that let you DCA hourly, which I think is kind of excessive. I think just once a week is good enough for us. But this is a you do you thing. The important thing is that you're consistent. You pick a equal portion, you pick a fixed interval, and you just stick to it. So far, by doing so, we've stacked 136 times, and we've converted a total of 2,720 dirty fiat US dollars into 9,012,104 sats. We did that just $20 at a time. Perhaps as importantly, we did so at an average purchase price of $30,181.63. Because we've DCA'd, we purchased at the all-time high, and we purchased at the cycle low, and we purchased everything in between. But because we're averaging, that smoothed our average price out to just $30,181.63, which is less than half what Bitcoin is currently valued at. To add today's stack, as I mentioned, we're going to use Cash App. Again, this is a you do you thing. Cash App is not a sponsor of the show. I just think they're the easiest way to stack relatively small amounts. And even though they charge a relatively large fee of 2.25%, that's only going to work out to about 45 cents for this stack. And they're going to let us transfer our Bitcoin to our hardware wallet for free when we have enough to do so. So that kind of comes out in the wash. So again, everything in life is a trade-off. This is the trade-off we're making. We're paying a slightly higher fee, but we've got ease and convenience. They'll let me transfer money from my debit card immediately, spend it on Bitcoin immediately, and then withdraw it immediately, which are things that a lot of services will not let you do. So you do you. Pick the service that fits your needs best. If you decide that Cash App is for you and you're not already a Cash App user, there is a referral code in the show notes. If you scroll down through the notes that are below the show on whichever podcast app you're listening to, you'll see a referral link. If you click on that and sign up, you'll get $5 free for signing up, and you will tip the podcast $5 as well too. So kind of doing the value for value thing, only you'll actually be getting paid to help support the podcast. So consider that. There's a number of other referral links in the show notes as well. If any of those services tickle your fancy, float your boat, and you're not already using them, please consider using a referral code. And if you don't use ours, use somebody's, because it's silly to throw away free money, free US dollars that you can immediately convert to Bitcoin. All right, Cash App's open. As usual, I always have $20 on Cash App, so it's just a matter of tapping Bitcoin, tapping buy, entering $20, tapping confirm, And boom, just like that, we purchased another 29,515 sats. Nowhere near as much as the 49,000 sats we purchased just a month ago. And that's because we purchased at a price of $66,238. That is now the most expensive in US dollar terms we've ever purchased during this podcast. So we've hit a new all-time high as far as DCA Wednesdays go. This is the highest Bitcoin price on any DCA Wednesday episode ever. So there's a new all-time high for you, and it doesn't even need to be adjusted for inflation. Previously, our highest purchase was $65,929, and the cheapest we purchased Bitcoin was for $16,469.03. Of course, you average all those purchases out, and that's where we got the $30,181 for an average cost basis. That has gone up, though, by another $122.68. As we buy at more expensive prices, that average cost basis is going to slowly tick up too. But still, our average cost basis is now $30,304.31, still less than half the price of Bitcoin. And more importantly, we grew our stack to 9,041,619 sats. It is looking like it's going to get harder and harder to reach our unofficial podcast stacking goal of 10 million sats. If Bitcoin stays exactly where it's at, that's going to take about a year worth of DCA Wednesdays to reach that goal. But, a million sats one day could potentially be $1 million. So we're going to keep stacking regardless of the price of Bitcoin is. Maybe we'll get there sooner if Bitcoin dips. Maybe it'll take us 2 years to get there. Maybe we'll never get there, but we're going to try. And regardless of what happens, once again, we have shown that DCA was better than YOLOing in, because let's say, for example, we've converted now 2,740 US dollars into Bitcoin. If we had all 2,740, which we didn't, which is part of the reason why you DCA, because you put in what you can every week. But let's say we had that $2,740 and we YOLO'd all in on the first DCA Wednesday episode. The price is $39,716. So not even including fees, just taking the raw numbers, assuming no fee, no spread, that would have purchased us a stack of 6,898,982 sats, which would currently be worth $4,569, whereas our stack as is worth $5,988.97. So had we YOLO'd in, we would have 2,142,637 fewer sats, and our stack would be worth $1,419 less in US dollar terms. So if we had YOLO'd the entire stack in all at once, we'd be doing a lot worse. And if we hadn't had the whole stack, let's say we'd had $500 and we split it up into 4 different purchases, we'd still be doing a lot worse off. Either way, our stack of 9,041,000 sats, when Bitcoin hits $100,000, which may happen before you know it, there's people that are guaranteeing, and nobody can guarantee, but there's people who are betting that Bitcoin will hit 100,000 before the halving. When it does, this stack, even if we don't add another single Satoshi, will be worth $9,041.61, way more than the $2,070. I'm having issues spouting this metric. The 2,720 US dollars that we converted into the stack. If Bitcoin goes to the moon and hits 1 million this cycle, or next cycle, or ever, the stack could be worth $90,416.19. And that is not too shabby for 2,740 US dollars at just $20 a week. Before we wrap this up, I want to ask you to help support the podcast. You can do so in multiple ways. Obviously, listening on Podcasting 2.0, you can send us a boost, or you can stream sats on a per minute basis, or you can get paid to help support the podcast financially by clicking on any one of those referral code links, such as the Cash App referral code, which I believe you get $5. Strike has another referral link that's about $5. Fold Card has a link that will give you 20,000 sats free for signing up, and that's worth significantly more than $5. And you don't even have to support us financially. The best way you can support us is by helping feed the algorithm monster. You can do so by writing a review for this podcast. You can do so by making sure you have automatic downloads enabled on iTunes, Apple Podcasts, for example. by subscribing to the podcast, by rating, by reviewing the podcast. You help feed that algorithm monster, which means more people are going to see this podcast pop up in their suggested feed, and you're going to help us orange pill more people and help us grow the podcast. You can also do so by following us on Twitter. If you're an X user or a Twitter user, if you follow us on Twitter at BTC Bulletin Pod, that helps feed the algorithm monster, and that helps more people find out about this podcast. Even if you don't feel inclined to help support the podcast, I'd still like to hear what you have to say. Obviously, you can send us a boost, but you can let us know what you think for free by DMing me on Twitter, again, at BTC Bulletin Pod, or by sending me an email, and my email address is bitcoinbulletin@protonmail.com. Most importantly, though, please remember to join us next Wednesday and every Wednesday while we grow that stack together, while we try and achieve that at least 10 million sat goal and beyond, as long as people are still willing to still willing to sell us sats for money that the federal government has just printed, or the Federal Reserve has just printed out of thin air. Either way, though, don't forget to keep on stacking those sats, you sexy sat stackers.